Hi, good evening, everyone. I will start in another 3 minutes. So please make sure you invite your friends and families for those who wanted to begin their investing journey.不知道刚才冷静了，现在还可能是在用 Zoom，因为 Zoom 有人。呃，sorry, there is some technical issues, so please wait a while. All right, good evening, everyone. Sorry, there's some technical issues there here. So first of all, thanks for attending these sharing sessions. Today I'll be talking about how to start investing by using easiest strategy, which is called dollar cost averaging. So this is it is the simplest strategies and has a very high win rate in long terms. So for those who are just new in investing journey, this is the simplest strategy you can find, and it's very beginner friendly. So I do hope you all stick closely to these uh, sharing sessions. All right, so everyone can hear my voice and see the screens. Um, I think the apps viewers, there is some issues with the app, so very sorry for the Hong Kong apps viewer. So there is some delay in the apps. So never mind. I will just go. I will still. Okay, there is some technical issues in the Hong Kong apps, Smart Hong Kong apps. So I'm very sorry about that. But never mind. I will still continue my presentations as there is a uh, Zoom viewers here. All right. All right. So let get started. Okay. Today my topics will be getting started with index fund DCA. What is DCA? DCA actually is dollar cost averaging. It means you buy a certain stocks like every week or every month, depends on you, with the same amount. And then without looking at the price. So you are investing for the long time, for the longer time frames. So by using DCA, dollar cost averaging, actually it's very hardly for you to miss the next bull run. So let's find out in details how can we write uh, the next bull runs. And this is the simplest methods that many fund managers use. Whether you are buying like the mutual funds, all those fund managers actually use this dollar cost averaging. So this is the simplest way and simplest strategy you can find for in investing. So let us discuss more about why using dollar cost averaging. So before I start, here is the disclaimer. Anything that I share about the stocks is not a buy recommendations. It's just for education purpose only. All right. So let us discuss what is long-term investing. So look, like Warren Buffett is a long-term investor. Everyone knows, and then he is very famous in investing the S&P 500 index. So what is S&P 500? S&P 500 actually is the 500 best company in US. So all these 500 companies uh, is is like they pull these 500 companies to become a index benchmark. So if the 500 company is not performing good, they will kick the company out and then find another best company in. So basically, is it is a pool of 500 best companies in US. So and averagely for the past 10 years, um, the returns per year averagely is around 10% over a long periods of time if you keep invest these S&P 500s, and it actually outperform many mutual funds outside there. And for long, if you have a long-term mindset, investing mindset, actually you can outperform most of the market traders and also mutual funds managers. Why? Because trading actually is very hard. It is a hardest way to earn easiest money. We can see that a lot of traders can earn a lot of monies in the short amount of time. However, in the long run, they actually lose a lot of money. There's a statistics about that. And there's a study show that long-term investor basically will outperform the market traders, and the winning rate is as high as 90% over long term. Long term is like around maybe 2 to 5 years at least. So some people feel that like the few weeks is long term, which is actually not. Long term, you must have the foresight. You have to have the foresight, like look at the stocks or index like for around more than 1 years, 2 years, even 3 years. You are like riding a big cycles of the market. And then if we learn trading, I doesn't mean that trading is not profitable. However, trading needs a lot of knowledge, skills, emotion must be stable, and then your decisions must be very quick. And then there's a lot of aspect that you need to focus to become a successful trader. So studies has shown that around 80 to 90% of day traders lose money, and then only 10% are about to make consistent profits in the long term. Actually, I think that is based on my friends. I think statistics around friends around me. I don't think that is 10%. Maybe it's less than 5%. And then most of my friends that success in trading, in investing in financial world, actually did invest for a long term. And then there's a studies in Brazil. They found that only 1% were profitable after 5 years of active trading. So actually, active trading is not that easy, like we see in YouTube, in social media. If you try trading before, you will know that your capital is not increasing. However, most of the time you are losing because you are trading a very high volatility stuff. In the short run, the price can be very volatile. So maybe after it's sideways, then you will miss the big trend because you tend to catch because there's many noises in the chart. So it's not very easy for normal people like beginners to win money by trading. And in fact, I'm the full-time trader for the past 7 years. I can say that um, I I slowly changed to mid to long terms, and then I found that my emotion is more stable, and then I found that I become more profitable by trading a bigger time frame. I'm not saying that trading shorter time frame cannot profit, but it really needs a lot of skills, techniques, and understandings about markets. It's not as easy as ABC. All right. So this is idea why for beginners it's better to start long-term investing. So why long-term investing has a better chance of winning than trading? Because you can wait. You have the patience. You do not all in. Like if we're using dollar cost averaging, we don't go all in. And then it can mitigate our risk. Then we can keep on compound our like dividends. And then in the long term, if you keep on buy a good quality stocks, I mean the top 1% good quality stocks, even sorry. So if you keep on investing in the top 1% good company, in in the long run, even though you buy at high, if you keep on buy, if you don't do dollar cost averaging, eventually you will earn money. All right, it's just as simple as ABC. You just need to have a good disciplines about how you earn after you earn the salary. You have a partial keep the partial amounts for long-term investing, like doing dollar cost averaging. This is how those insurance agents, those public mutual funds do they do. every month you are required to like buy certain amount of stocks. Then in the market there is bull market and bear markets. If you are started invest in the bear market, you will invest until there is a bull market. And then if you invest in the bull market, you started invest in the bull markets because you don't go all in. As long as you keep on buying, eventually it will hit bear markets and then eventually it will go back to the bull markets. So this is why those mutual funds they keep on ask you, they have the confidence to ask you keep on buying all those stocks even though when it drops. They will keep on ask you to top up because in the long term, like 5 to 10 years, there will be one good bull run. Eventually, if you buy in the bear market, when bull runs strike, eventually you will become profitable. It's just as simple as ABC, dollar cost average. And then if you keep on trading, actually most of the people have the low win rates because you need to predict a very accurately very small market movement. If you all have been trying to trade before, you will know what I'm saying. All right, so today we will focus on long-term trading. So long-term investment. So by doing long-term investment, actually we can gain more money by doing compounding, and then our stress is not so high because we will not monitor the market's movement every seconds, and then if we do dollar cost averaging, there's no need time to time the markets. We just buy whenever there is every month or every week depends on your um, fund allocations. So you no need to time the markets. You buy, you see you have extra money, you just buy. Like let's say every month you want to buy $500, you just put it $5, then you just buy the ETF like S&P 500. Just keep on buy until the next bull market come. And then for the long-term investing, usually we will choose stocks or good stocks and good ETFs. And then basically we don't put all eggs in one basket. So if you invest in S&P 500, basically it help you uh, to diverse into 500 company. So S&P 500 is one of the good stocks, good ETF. Another one will be Nasdaq, the top 100 tech company, best tech company in US, and maybe some good stocks like monopolies, like those stocks with economic modes like Microsoft, Google, Amazon's, Apple's, Visa, Mastercard, all these very good economy mode stocks. If you want to invest for the long term, we don't choose those mid cap or small cap stocks because it's very unpredictable. Yeah. So we try to invest in those top 1% quality stocks. All right. Then for long-term investing, we also can choose those dividend stocks with a very good background. And in long term, we can earn the dividends and also the capital appreciation. Let me give some examples. So for long-term investing, this is some people's they play dividends. So how we pick those good dividend stocks? All right. Usually when you do a homeworks, then you are aiming some good quality dividend stocks. Usually we don't buy straight away. For me, I will wait for the price to drops a lot, and then I only will start buying because we try to buy the good good stocks, especially the bank stock when the market is not that good, like maybe crash a lot. Yes, you can also do the dollar cost averaging, but because I'm aiming for the dividend use, for me, I personally will wait when there's a very sharp drops in the high time frames support, then I will only will scale in funds, but it really depends. But how invest in dividends can make you rich. Many people think that dividends is not worth investing because the dividend actually is varies a bit. So let me give some examples on why investing for long in dividend stocks will lead you to become will increase your capitals in the long run. So let's say if you buy a share, a dividend share with $1 per share, and then the dividend is 0.02 per share. So it means that it is 2% dividend yield. So when the price rises to $2, the dividend per share, because it's like 2%, will rise to 0.04. Initially, you buy the share at $1, and then after it rises to $2, the dividend per share is 0.0204. It basically your dividend yield has increased from 2% to 4%, while your initial capitals had doubled, right? From $1 to $2, and then the dividend yield from 0.02 to 0.04. And then the dividend yield become 4%. So in this case, you can see that your capitals had a 100% capital appreciation, and then the dividend is 4% dividend yield. What if the price continue to flip up to $4? It means you can get a 8%, you get a 4x returns, and then you get a 8% capital dividends yield. So this is how you can get more money by investing in small money when you invest in the good dividend stocks. In the long run, you take the dividends and then keep on reinvest into the markets. Then in the long run, there's some compounding effects, and then you will see your capital growth, passive income like grow rapidly over a long run. So if you all have any questions, please let me know. And then for the Hong Kong user apps, I'm very sorry because there is some technical issues in the server. And then now only just a Zoom viewers only. So the principles of long-term investing actually is very simple. Just start early and be patient. And also be disciplined. Yeah, this is what I this is just basically these three only. Start early, be patient, and be disciplined. And then do diversifications like buying SPX 500, SPY 500, or Nasdaq ETF, or maybe divert into 2 or 3 stocks or the bank stocks. It depends on your portfolio allocations. Then we use the dividend. If you invest in the dividends, we use the dividends to reinvest. If you get the dividends, then we invest back into the stocks. Just be consistent, be disciplined. And then there's some research tools that I use to find those good fundamentals stocks. All these, actually, I didn't use that much because I just picked the good ETF and those monopoly stocks. Like I will find like monopoly one, yeah, like Mastercard, Visa, maybe like in crypto recently, I think it's Coinbase. Those head of the industry. So for the individual stocks, I will pick those stable stocks like Apple's and Meta, but I will I will not all in. Remember, always do not all in the markets. You just do the dollar cost averaging because you don't want to time the markets. Actually, time the market is very hard. All right. Then lastly, we'll pick the ETF, very good ETF, the SPX 500 or Nasdaq. Then instead of, and how we pick out the diamonds, yeah, just now I just explained, we find a top 1% good company, And then those companies have economic modes. Like Microsoft, they have their own economic modes. Like Apple's, their own branding. Meta, Visa, Mastercard, Coinbase, PLTR, all those good economic mode stocks. Then index funds ETFs will be those just now I mentioned Nasdaq and SPX. I just focus on US stocks. So I think US stocks had compared to others company stocks had a better appreciation and then looks back the history. So I just focus on US stocks. Then we need to avoid cyclical industries like oil, those commodities. Gold maybe yes in the long run, like oil, like those cocoa, those had a high volume cyclicals, health have a high cyclicals industries. So, and then lastly, we need to identify the current market cycle trends. Like now is sideways uptrends or downtrends. Yeah. So I will share with you all how we look at the macro trend because many people don't have any ideas on how to look at the market trend in big picture. I mean very big picture. So yeah, for those just now I mentioned, all those is an ideas on how long-term investing um, works. And then now I will share more about how do we actually do dollar cost averaging. These are definitions of the dollar cost averaging. The investment strategies where a fixed amount of money is invested at a regular intervals. Regardless of any regardless of any market conditions, is commonly referred to dollar cost averaging, DCA. So we just buy in with the same amount of money at a regular intervals, like maybe 1 week or 2 weeks or every 1 month. It depends on your frequency. So there is two strategies in dollar cost averaging. One is fixed DCA, another is flexible DCA. So this is some case study. So this is gold. This is gold. So you can see that from 2021 to 20 around 2023, there's a decline of 30%, right? So for long-term investing, actually you need to have a mindset that you are looking for 3 to 5 years at least. Because you do not go all in, right? If you go all in, let's say you got 100K or 1 million, 100K, for the 3 years, it drops 30%. If you unlucky to you buy at a high, let's say you buy a high, then it drops 30% for over 3 years. Can you still hold it? Can you believe it? No. So dollar cost averaging actually is very helpful for those who still working because every month you will just buy in slowly. As the times goes for very long, you will accumulate a very big amount, right? Because you don't go all in. If you go all in, then it suddenly drop 50%, then you lose a lot of money. However, if you buy it slowly over the time, your average price will be much more lower if the trend is downtrend. All right. So after these 3 years, the price started to break out. The price started to go higher and higher. So for the past 3 years, if you keep on invest in gold, then every new high it made now, your positions for the past 3 years will be in earning state. You, then you keep on buying, it depends. And then when you feel the market is very hype, maybe you can just sell off 50% or 70%. Then when it drops till certain point, then you start the cost averaging again. It depends on your strategy. So the idea is we use time and then to keep on buying these good stocks, like this one is gold, then eventually if you invested in the bear markets, of bear market actually is the best time to invest because you are not all in, you just keep on buy, and then eventually the bull market will come. This is a cycle. Got bull markets and got bear markets. You just buy until the next cycle come. And then this one, another one will be the Nasdaq. Nasdaq, yeah. So if you bought Nasdaq at high 2022, if you go all in at high, even if you that is that unlucky, that you will suffer around 38% drops. However, if you just started invest in bear markets, you don't go all in, you do dollar cost averaging. So you keep on buying, even though it's still dropping because you are buying the best 100 top company. Eventually, maybe after 3 years, 2 years, the price started to goes up. Then you still want buy. So now every new high the Nasdaq made, you continue your previous 3 years or 4 years positions will be earning money. So it's that just that simple. If the price is very low at bottoms for like, I think the longer it takes, then you accumulate a lot of stocks on hand. Then eventually the new high comes, you will eventually become very profitable. So in order for those to hit new high, you must invest in the top quality stocks because just the top quality stocks will perform for the long run, and some bad stocks it won't come back in the next bull cycle. So we just aim these good quality stocks and ETFs, and this is very easy, right? This is very easy. So there's two types of dollar cost averaging. One is fixed and one is flexible. Fixed is you don't time the markets, you just buy the same amount. Like let's say every week you buy $500, you just keep on buy $500. But like flexibles, you can like make, maybe somebody just feels like now the market price is very high. Like maybe now, like let's say Bitcoin now it's very high. Then like invest initially you want to invest $500. Maybe now you feel you just start with $200 every month. Then when it drops another maybe 10K dollars, you scale in like $300 every month because initially you are you are planned to buy $500 every month. Then it drops another 10K area. At that area, you every month you started to invest $400, and then it drops another 10K, you invest $500. So by doing this, actually you can lower down the cost effectively. And then if there's bear market strike, eventually you accumulate a lot of stocks, a lot of shares or stocks of Bitcoin at a very good price. Then you fight until uh, go through all these bear markets, and then you fight until next bull markets. If next bull market takes 3 years, then for sure you accumulate a lot of good stocks, good shares or good Bitcoin amount of Bitcoin. Then eventually you'll earn a lot of money by that time. So it's very simple. You just keep on buy, but not all in. So you just save every month. You just save some money. Then you just keep on buying a good quality stocks. So until here, is there any questions? So like just now I said the good stocks like Visa, there is a strong economic modes. You can see that over a long run, if you keep on buying, your average price will be the red line. So if it keep on makes the new high, then eventually you will earn money while you are getting the dividends to spend. So just pick a good quality company. Don't try to uh, pick those unproven track records company like small cap company or big cap company. And then this is extra uh, and for you all. Thanks for coming these sessions because this this is how we determine the market cycle, big market cycle. So let's say let's take Nvidia as an example. Usually, by the time we know this stock usually is at the media attention stage. So you can see that it's already at the third stage, mania phase. So smart money will buy at low, institutional investor will buy at somewhere beginning of when the beginning of the price goes up, and then the public will always buy after the media attention. So we knew that our market is around maybe at the top already. Yeah, at the top already. So is it a good time to go all in at this stage? No, because there's a high probability that the markets will dump, you'll retrace a lot. And then we don't time the markets, right? Then we can start to do dollar cost averaging. But we need to have some idea where our markets cycle now are. So now we can look at the market. We are around at the top of the market. So we don't know whether it will drop or not. But to avoid we miss the another another big trend, we just do dollar cost averaging. All right, even though it continue to crash, let's say that if because recently the market, I think everyone knows is not very good, right? If 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 the market really enters the bear phase, but we just slowly to buy, keep on buying until the next bull market. It give it the bear market maybe usually last for 1 to 2 years or even 3 years. Then is the time for you to start investing. Then we will somehow become richer in the next bull market. All right, just chill and don't go all in because I see many people go all in, so they are very fear now. But if the trends really retrace, become a bear market, there is more to come. But we don't time the markets. So this is how I read how I gauge the markets. Then, but I will still do the DCA. But if it drops more, I will DCA even more. Just separate your DCA funds. Like maybe it depends on your strategy. You can do the fixed DCA or you do a flexible DCA like I mentioned. So just plan your cash on hand well. Then we use time, and then over the times you can get a lot of money, hopefully. So I think this is how I share about this long-term investing mindset. Um, is there any questions? I, oh, sorry. I just it's how to um how to open an account on Usmart and what are your preferred? Did you join the Telegram? Do you have any the Telegrams? Erwin Garcia. So maybe later you add my Telegrams. Then I will share with you. Yeah. Okay. All right. So wait about yeah. So the left side will be the WeChat, and then the right side will be my Telegram. So if you are interested in contacting me, make sure you all can join the group and then PM me in the group and then find me in the groups and PM me. All right. Maybe just screenshot it first. Then I will try to finish my slide, last few slides. Thank you. All right. All right. So this is Usmart apps. So how do we do this dollar cost averaging? Dollar cost averaging, I mentioned this is the normal fund managers do. They just actually fund manager is not that hard to do. They just pick a good stock, and then every month they are just keep buying. If you lose money, they will still ask you to buy until next buy until next bull market. Let's say even if this now is entering the bear market stage, it dropped a lot, they will still keep ask you to buy because they are confident, and there's many cases that it will come back eventually as long as you don't all in, right? Okay, so this is Usmart app. Usmart app, there is two Usmart app. One is Singapore apps and another one is Hong Kong apps, and then it's roughly the same one. And then if you want to invest long term invest in this S&P ETF, you can um, pick the S&P 500 ETF. Then you choose these regular saving plans. Then the investment amounts will be minimum $100 per month. So the investment times it depends on you, and then you just press confirm. Then every month it will deduct the money in your trading account. Yeah. And then this one is a Hong Kong app. It's roughly the same, but you press the monthly investment there. Then the steps is almost the same. And then if you all have successfully opened these SG apps or Hong Kong apps, actually you all can contact your own managers, managers. So for Hong Kong app, you choose the Prestige service. This is not a common customer service. This is a Prestige service of the customer service. You can contact your managers here. All right. So this is all I have to share today. So thanks for your coming listen to this sharing sessions. I hope you all learn something. So for those who don't do trading, you all can try to start long-term investing. Then just take the time with you all. Don't be scared of when the market drops a lot. Because we have seen that the markets will always rise if the company is doing good. And then even if you pick a good ETF, because it's the strongest ETF, eventually it designed to goes up in the long run because inflation also cause the money become smaller, and then the index numbers will definitely become bigger over the long run. So yeah, just just be chill. Then slowly buy. Don't go all in. Take care of your cash flow. Yeah, then you are good to go. But you need to have the mindset, disciplines for long run. This is the easiest way because many people feel that they trade can earn a lot of money, but they keep on trades and lose money. Eventually, they don't have money for a long run. So looking back, there's a lot of time they miss a big gain in the markets. All right. So if you all have any questions, can join the Telegrams group. Still new the groups, but if there's more people, we will share more there. Share more maybe good info there. All right. And for those who want to contact me, the left side is my WeCom. You can use WeChat to add, and the right side will be Telegrams, and then you all can find me in the groups. And for those who don't have any apps, can contact me to get maybe use my referral. Yeah. All right. Thank you very much. Okay, Richard Chi. Sorry, I just saw questions. Richard Chi. If you buy a fund ETF on your smart over a separator, what happens if I don't think um I don't think you smart with if you don't if they no longer operating, if it's like use like under SG, right? If it no longer operating, the mask, I think SG is mask, right? They will definitely ask them to refund the money to the customer. If not, if they close it and then they run away from Singapore, I don't think they can they can beat the Singapore law or Hong Kong law. Usually for the Southeast Asia, we use Singapore apps. We will definitely have access to the you will definitely have access to the fund idea because it's under protection of your Singapore must, right? I think the authority, I'm not sure, I think it's must. So did I answer your questions? Uh, Actually, the ETF you can find it in any others uh, platform, but since you are this is presented by UseMart, I will recommend you to use UseMart. So so I can continue to like provide um, value to the UseMart customer service. So no point if every time I share this knowledge and then everyone opens others app, then there's no point for me to go and I might lose my job. Yeah, just kidding. All right. So thanks for the support, and I hope you all can use UseMart because the fees actually is quite low, and there is some promotions like commissions free, and you all can check it out. All right. Just anything can just try contact me in Telegrams or just leave it down in the Telegram chat groups. All right. I hope I had answered all of your questions. And then, yeah, thanks for coming. I think I will end my sessions here today. So don't be panic if the market's going down because you are not all in. You must treat those ETF like assets because many people trade stocks and then eventually their stocks become their liability because they keep on chase high cut low and then they don't know what they are buying and then they buy stocks that are very bad, no fundamentals. This eventually they will lose money. All right. Okay. Thanks for coming. I will end my sessions here today. No questions. May the market with you all. Bye.